Hey there, it's Ryan Skaggs. This is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage and mortgage interest rate related, as well as some real estate data in there as well. So let's give you that update. The average 30-year fixed has snuck above 3%, first time since July of 2020. So 3.02 is the average 30-year fixed according to Freddie Mac. Check out that link below. So if you want to get more updates, I put out weekly videos on interest rates, on the mortgage market, different mortgage tips and explanations. So click that like button, click subscribe, just so you can be notified when those new videos come out. So I would be forever grateful for that subscribe. Place your comments below if you have questions. So one of the questions that I've got quite a bit over the last week is now the right time to buy, given this hot seller's market? And in most communities, in most metropolitan areas, we've absolutely seen a very hot market. So what I did is I put together an analysis of where we were at a year ago in spring, where we're at today. So in this case, in spring today, we've got a $500,000 home, just as our kind of line in the sand on average. That was likely worth about 8% less last year because we saw a really nice appreciation. Some metropolitan areas, even specifically the one I'm in the greater Chicagoland area, we saw double digits in a lot of communities, but I'm trying to be as conservative as possible. So we look at 460, we've got 500 today. Now I've also given you two columns of what if prices continue to go up by 5, or to the naysayers, what if they go down by 5? Is now really a good time to buy? And that's really what we want to talk about here. So we've got our constant right there in the middle of spring of 2021. Now, when we look at the different interest rates, the average 30-year fix back in spring of 2020, roughly the same week 1 year ago, 3.65 according to Freddie Mac, today 3.02. Looking at National Association of Realtors, Mortgage Bankers Association, and others, 3.62 is basically an average of those interest rates that we'll likely see in another year because everyone projects us going up. Now, in this spring of 2022 columns, which I'll highlight here real quick, is that my contention is that housing prices typically follow inflation. And if we're going to see a lot of inflation over the next year to 2 years and beyond, is that housing prices will likely continue to increase. So I think there's a lot of risk in waiting right now, especially with how low interest rates are at. But again, to those people that are thinking, hey, prices might go down, let's look at it. $500,000 today at 3.02. This is just an estimate on property taxes and insurance, but your payment is $2649.06. That same estimate over here with a higher interest rate and a value that has gone down is literally the same payment, $6.72. So for basically one fancy cup of coffee different, you're waiting, but your risk is $271.42 in this case, right? So your reward is one extra fancy cup of coffee and your risk is over $270 in this projection. So when people ask me, is now a good time to buy? I don't want people to overpay. Absolutely not. But what I do want is to evaluate where we're at in this current market. And in my mind, it's an absolutely great time to buy because interest rates are still low. You still haven't seen potentially more appreciation in the home. And even if it stays flat or goes down a little bit, you're still making out better from a monthly payment perspective. So again, mortgage market is now a good time to buy. In my opinion, we've still got low rates. Prices continue to still go up and you'd still be okay. Drop your comments below. Let me know what you think. Click that subscribe button. I would be forever grateful. Again, Ryan Skaggs for the Mortgage Minute. Thank you so much for tuning in, and we'll see each other again very, very soon.